Good evening. In this video, I'd like to talk to you a little bit about the financial aspect of this change, were we to make this change, and how that would actually work financially so you can see some of the savings that led us to bring this conversation to you. One thing I do want to address up front is all of the numbers you're about to see are based on our best information going into next year. This is based on our rate quote from Mesa for next year. It's based on next year's state mandated hard cap. If numbers were to change through Mesa or those kind of things, these numbers, could possibly change a little bit, but these are based on the projections that we have going forward for next year. If you will look at the first screen, you'll notice that this table is also in the lower right-hand corner of the window that you clicked on to get here. And you can blow that. If you zoom in on that you can see this in a more static form as well. But what I want to point out here is that this compares the current Mesa with the proposed self-funded plan. We have a category here for every group, whether you're a full family, a two-person, or a single subscriber. And we compare these two numbers. So I'm going to just talk full family for a minute for the sake of time here. But you'll notice here that the state has determined that the Hamilton Community Schools may pay up to $19,210.66 for a full family's health insurance for next year. If you are with Mesa and stay on the Choices plan, that premium, it will cost you $21,039. So it's going to cost you a little less than $3,000. Sorry, it's a little less than $2,000 more. Excuse me. It's going to cost your deductible is $1,000. Therefore, the difference between these two plus your deductible brings you to a total possible out-of-pocket of $1,828. Excuse me. That's what's a little less than $2,000. My point is that this does assume you spend your whole deductible, but if you do, you could be out of pocket for up to $1,800 next year. If we were to switch to a self-funded plan, not only does your premium come in considerably below, therefore your deductible will be covered. The district will set aside money to cover your deductible so that you don't pay that out of pocket. This $1,000 does come out of the savings, just to be very clear. But that still leaves a gap of $1,473, which the district will pay you back. You'll have your option to receive that money back as a cash payment, which of course would have to be taxed, or as an investment into some sort of a 403B or other investment account, or as a flex spending account. So there are ways to get that back as a tax sheltered option as well. And you can see corresponding numbers here for two-person and two-person and single and single. And in every case, the self-funded plan will be giving you money back. In the worst case scenario, at least the sticking with Mesa would be costing us money. Now, if we compare the same thing under the HSA account, this is assuming that you're already on an HSA. Right now, your premium is, as a full family, your premium is less than what Hamilton can pay. So they give some of this money back to you. However, you could be out of pocket for up to $2,800 for your deductible, which still next year would leave you with as much as a $2,000 bill for healthcare. On the other hand, if we switched to the self-funded plan, still offered an HSA, which we will, which we would if the decision is made, you can notice a much larger gap in here. That larger gap would be used to fully fund and cover your $2,800 deductible and still provide you with $1,700 back when all was said and done. So again, you'll notice all red numbers here and differing amounts, but all cash back in your pocket or black numbers here, even after your deductible is covered. Again, equal coverage assured by the contract as what we're currently getting from Mesa, so no change to coverage. There will be savings in the administrative fees, and these savings will be kept by the district and held in this healthcare only fund balance, which will be used to buy down rates in the future. We also will talk later about a committee to help monitor these costs and make decisions. But in short, that committee will give us as members a bigger say in healthcare decisions we'll make in the future. Thank you for your time, and go Hawks.